The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Thursday. Welcome to another edition of Breakout Investing on TFNN, 5 days a week from 3 to 4 Eastern. As always, thanks very much for tuning in. Number to use to talk to me if you want to talk about this market. 877-927-6648, 877-927-6648. You can pick my show up as a podcast on iTunes, and don't forget you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi, your smartphone browser, and you can listen to the stream that way as well. We'll be going over a lot of charts on my program today, as we always do. If you want to look at those charts live right along with me, you can do it on Tiger TV, right on the homepage of TFNN.com. Channel 1, the show is carried live, and Channel 13, the show is archived. You can also watch Tiger TV on your handheld device as well. Folks, don't forget about the Tiger Dollar promotion going on at TFNN.com. If you purchase Tiger dollars on September 16th or before, you're going to get a bigger match, more free money on your Tiger Dollar purchase, anywhere from 20 to 30% free money based on the amount of Tiger Dollars that you purchase. You can use Tiger Dollars to purchase products at TFNN.com, and if you act before September 16th, you'll be able to attend Tom O'Brien's online trading workshop. That's going to be Friday, October 5th, 5 hours from 8 a.m. Eastern to 1 p.m. Eastern. Tom's going to be trading a live account, and you can watch how he does things. So take advantage of an instant bonus of 20 to 30% on your money if you purchase Tiger Dollars before September 16th. All right, hey, let's take a look at this market, because I have been bullish, and I'm happy to be a bull on a day like today, where we've got the Nasdaq Composite up about 44.5 points right now, up 1.4% to 3159. Good strong day of accumulation for the Nasdaq. If it's not clear by now, there does seem to be money coming in from the sidelines here. Bonds are weak again today. I think this money coming out of bonds and into stocks is a story that could have some legs here, and we're seeing decent volume in the Nasdaq today. Right now it's tracking about 10% higher than what we saw on Wednesday. Wednesday's volume on the Nasdaq was 1.67 billion shares. If we stay the way we are right now, we could come in close to 1.8 billion on the Nasdaq, and on the NYSE it's even heavier, tracking about 20% higher than what we saw Wednesday. Wednesday's volume was 659 million shares. If we stay at the current volume pace, we could come in close to 800 million on the New York Stock Exchange today. So good day of gains for the major averages. That's a look at the Nasdaq Composite, again up 1.4%. Take a look at the S&P 500 here. Its percentage gain a little bit better, up 1.6% now. Good strong move, trading up near its session high, up close to 23 points to 1459. And let's check in on the Dow. I don't check the Dow every day, but it's also performing well today. Financials doing well in the Dow. The Dow is up 1.5%, 201 points to 13,534. If you haven't taken my newsletter, Ultimate Growth Stocks, for a test drive yet, you can do that right on the homepage of TFNN.com. Just click on the newsletter tab on the homepage, then investment newsletters, and you can check out 30 days free of Ultimate Growth Stocks, and you can also access the letter other areas on the homepage. But got about 10 or 11 names in there right now that are outperforming nicely. Feel like I'm well positioned here, and just going to ride this market trend for as long as the market lets me. And again, I'm optimistic that we could end the year pretty well here. We've been running higher for a while, so I'm positioned for maybe a pullback at some point. But I'm still in that camp that if we do get a pullback, it's probably going to be a buying opportunity and pretty short-lived. Of course, that's going to depend on headlines that come between now and the end of the year. But certainly the buying in the market today, a result of what the Fed said today by an 11-to-1 vote. The Federal Reserve launched a new program of open-ended bond purchases. They're going to buy $40 billion in agency mortgage-backed securities each month starting Friday. The FOMC decided to keep the Fed funds rate at 0 to 0.25%. Said, quote, exceptionally low levels for the federal funds rate are likely to be warranted at least through mid-2015. So it was a little bit of change in language there. Last language was that rates would stay exceptionally low through the end of 2014. So they stretched that out a little bit. In the press conference, the Fed did give a forecast for unemployment. Unfortunately, it's not good news. The Fed is obviously concerned about the job picture here, and that is a potential headwind for the market. But they're looking at an unemployment rate between 7.6% and 7.9% in 2013, falling to 6.7% to 7.3% in 2014. Bernanke in the press conference also said that QE3 is a policy to help Main Street, which I thought was interesting because we've had a couple of rounds of quantitative easing up to this point. We had QE1, we had QE2, now we have QE3, and I think if you ask the average American what has this quantitative easing done, it's lowered interest rates, and a 30-year mortgage is very, very cheap, but banks still are not lending that much money. And I think if you just ask the American consumer how QE1, QE2, QE3 is affecting them, there's not an easy answer to that with high unemployment out there and these kinds of things. So he said the goal is to help Main Street. Obviously, the goal, according to the Fed, QE3 is going to eventually result in a stronger job market, but it is going to take some time based on what the Fed forecast is for the unemployment rate next year and in 2014. Mentioned inside the Dow, some financial stocks performing well today. Let's take a look at Bank of America. Dow component up a little more than 5% today. Big move, hits an intraday low of $8.81. Bank of America now trading around $9.43. Financials definitely under accumulation here today. Bank of America still has some resistance to deal with at 10. So despite a big move over the past 6 trading sessions or so, it is still sitting underneath resistance at $10. Take a look at American Express, also in the Dow, having a strong day, up 3.1% to 59.05. Resistance for American Express at $60 a share. So a lot of these stocks, even though they've made big moves, they're still trying to come out of these big bases, and I think that's compelling, because if you get these financials that all of a sudden start breaking out, that's another layer of leadership in this market that I think would be noteworthy, worth paying attention to. Finally, inside the Dow, J.P. Morgan Chase up 3.5% today to 41.31. It still has more work to do to complete the right side of its base. Current resistance at J.P. Morgan at 46. And finally, we'll take a look at the XLF, the financial select sector spider ETF. It is outperforming today, up 2.5% to 16.12. Let's take a look at the weekly chart for this financial ETF. Let's see where it is. I think it's under the F. Let me just, here it is, Financial Select Sector Spider. And when you look at this weekly chart, you can see a long base that started back in March, April, corrected down to about 13.25. From a high of 16. It has worked its way higher. You're looking at what could end up being 8 straight weekly price gains at the end of this week for the XLF, and you look at this weekly chart and you see that it could still be in the early stages of a breakout here. So XLF acting well today. The U.S. dollar weak again, recently at 79.21, down 52 ticks. Take a look at a chart of the U.S. dollar. We've been checking in on the U.S. dollar index almost daily, but you can see it's really been beaten up. It crashed below its 200-day moving average earlier this week on Monday. It closed Wednesday at 79.74. Again, down another 52 ticks to 79.21. And we look at a chart of a weekly chart of the U.S. dollar index, and I put some key support levels here to watch because it is getting close to some longer-term support levels, 78.60 and also 78.10. So at 79.21, it's not that far away from its first support level at 78.60 here. So we'll watch and see if the dollar firms up in the near term. Weakness in the dollar, of course, has brought buyers into gold. Let's take a look at the GLD here, up big today, up 1.9% to 171.12. Hits an intraday low of 166.30. Trading up near its session high. Another strong. You see all the accumulation going on in gold here. Several above average volume price increases. Today, gold for December delivery jumped $38.40, 2.2%, and finished at $1,772.10 an ounce. Oil today up 1.3% to 98.31. And we'll take a look at the Cboe Volatility Index. It is really getting whacked today, down almost 10% to 1426. Hit a high today of 1654, which is pretty much right where its 50-day moving average is. It has reversed near its session low. A lot of technical damage here in the VIX, and getting whacked pretty good today, down again close to 10% to 1426. Some let me check the yields on the 10-year note, right around 1.8%. Bonds have been coming in. Again, money coming out of the bond market. Yields going higher. The yield on the 10-year note up a little bit today to 1.8%. The 30-year bond at 2.98%. So just underneath that 3% level for the 30-year bond. Economic data today. We had weekly jobless claims up more than expected. They rose 15,000 last week to 382,000. A little more than expected. Part of the rise was attributed to Tropical Storm Isaac. The prior week of claims was revised slightly higher to 367,000 from 365,000. So clearly the market not focusing on a larger than expected jump in weekly jobless claims today. They're focusing on the Fed and the Fed alone. So bullish day of accumulation for the major averages today. The market trend is upward until proven otherwise, and that is why I've been putting money to work in the Ultimate Growth Stocks model portfolio, and happy that I've been doing it since late July, early August. We also had the latest reading on wholesale prices today. Producer price index up a little hotter than expected, up 1.7% in August. Expectations were for a 1.2% rise. Core rate in line, up 0.2%. And tomorrow we've got retail sales for August. We've got the consumer price index, industrial production capacity utilization, and the Michigan sentiment as well. So busy day of economic data tomorrow. Stick with me, folks. Headed into break number 1. You're listening to Breakout Investing on TFNN. Ken Shreve with you. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Ken Shreve with you, as I am every day on TFNN from 3 to 4 Eastern. Let's see, what other house cleaning items do we have today? I'll mention the phone number again, 877-927-6648. Give me a call if you want to talk about this market. Let's check inside the NASDAQ 100 today. Take a look at Apple. Boy, Apple, I talked about Apple yesterday ahead of had its iPhone press event yesterday. The stock really was acting squirrely Monday and Tuesday earlier this week. Wednesday, it looked like it was going to, sell the news. And then I remember I went off the air yesterday right at the market close, and I think Apple was about break even for the day. And I think the last, 5-10 minutes of trading, it went up 9 points at the drop of a hat. So finished up near its session high, ended up being a nice accumulation day for Apple yesterday, and the stock is following through today. Volume isn't as heavy as it was yesterday, but still nice day of outperformance for Apple, up $13.81, almost 2.1% to $683.60. I am long Apple in the Ultimate Growth Stocks model portfolio. The stock got a bunch of raised price targets today, not surprising. JP Morgan analyst Mark Moskowitz didn't raise his price target, but he reiterated his overweight rating on the stock with a price target of $770 a share. Deutsche Bank raised its price target to $775 from $650, and Barclays increased its target to $810 from $750. So, of course, yesterday the news, Apple, they released actually a lower-priced iPhone. The iPhone 5 is going to come with 3 different price points: $199, $299, and $399. It's going to be a larger screen, lighter phone, thinner, made entirely of glass and aluminum. So I think the theory that there's a lot of pent-up demand. You talk to people who have been putting off iPhone purchases to wait for the iPhone 5. I think it could be a very, very big Christmas for the iPhone, and there's talk that Apple might also be releasing a smaller version of the iPad tablet computer called the iPad Mini. So it could be a big Christmas for Apple. I think that's why you're still seeing the stock acting as well as it is. Checking some headlines today. Let's take a look at GWR, Genesee, and Wyoming. Stock is under a bit of pressure today. It had been acting well, had a nice little breakout in the regional railroad operator. It is down 3.6% today to 65.48. Company said Wednesday it will sell more than 3 million shares of stock and 2 million equity units to fund its recent $1.4 billion purchase of fellow regional railroad operator Rail America. GWR is offering again 3.3 million shares of stock and some 2 million equity units. The units will price at $100 each. They'll turn into Class A shares on October 1st, 2015 if they are not redeemed earlier. Take a look at another model portfolio holding today. Shares of Equinix. Like it when a stock rises like this. Equinix hit an intraday high today of $212 a share. It is now trading around $200 even, up 7.2% on the day. The news is that Equinix's board approved plans to convert to a real estate investment trust by the start of 2015. That will give the company some tremendous tax benefits, and that's why the stock is rallying on the news. It is well off its high, again trading around $200. It hit an intraday high of $212. So Equinix having a good day. The still has to be approved by the IRS, but investors taking this as good news for sure. All right, 877-927-6648. Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. How about you?
Oh, not too bad.
Hey, buddy. Go ahead. I'm sorry. Go ahead.
No, I'm just saying, enjoying. I've been bullish on this market and enjoying a good day of buying in the major averages for sure.
Yes, sir. And I know I'm like a lot of listeners. We thank you so much for helping us to earn money in the market, and Mr. O'Brien also. What you all do at TFNN, it is absolutely huge. We appreciate it very much.
Well, I appreciate that comment very much, and I'm sure Tom does too. Thanks very much.
Okay, I have a couple of questions. The first one is, can you talk about how you move in on margin?
We got a break coming up, so I'm going to ask you to hold on the line, John. I'll come back to you after the break, and we'll talk about margin. Okay?
Yeah, that's great. Thank you so much.
All right, hang tight.
Yes, sir.
All right, folks. Talking to John in Austin, Texas. We're going to talk about going out in a margin. Probably a decent market to be doing that right now. But we'll talk specifics when we come back. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. We're on the phone with John from Austin, Texas, and just had a question on using margin. Was it just sort of an open-ended question, John? Are you on margin right now, or what's the specific question?
I'm not on margin yet. I'm going to be here once I get fully invested. But I just wanted to know, how you as a professional and how you know the market so well, your wisdom of how you use margin, if you don't mind.
Well, let me be frank with you. I do not use margin. That's probably going to be surprising to a lot of people, but I'm kind of conservative in that way. So when I'm buying stocks in an uptrending market, I'm just using the cash that I have, and I just don't like borrowing money from my broker to buy additional stock. So again, that might be surprising to some people, but it's just it's a frank answer. So I've tried it. I tried it in the past, but I just the concept of it. When you're using margin, first of all, you need to be in a good, solid, uptrending market to really reap the benefit of margin. But if the market turns on you, obviously being on margin, your losses can multiply. So I think it's just the conservative side of me. I like to buy aggressive growth stocks, but margin. Even when I first started off in the business, I said, borrowing money to buy stocks, I just don't feel right about that. So that's my short answer on it. I don't use margin myself. I know a lot of people in recent weeks, colleagues of mine, that are starting to get margined. They like the look of this market. So, that's kind of where I'm at. I don't know if that probably doesn't help you much, but
Yeah, that's fine, buddy. And I'm sure the majority of us, if we had the kind of portfolio, the amount in the portfolio that you have, you probably don't need margin. But yeah. But the other question I have, real quick, if you don't mind, I know that when you were at IBD, and they talked about when a stock goes up 20% in 1 to 3 weeks. You
right.
Personally, when you get into a stock and it goes up 20% in 1 to 3 weeks, how do you handle that? Do you pyramid in more aggressively than you would normally?
Well, the thinking behind that IBD rule is that you could have a big market winner on your hands. So just to review what John said, folks, is that if you buy a stock when it's breaking out of a base and it goes up 20% in a very short amount of time, 1, 2, 3 weeks time, the rule is to hold it for at least 8 weeks. Okay, the rule is to hold the stock for at least 8 weeks. Now, your decision on adding or pyramiding up, and again, that's something that I do like to do. I never average down in stocks. I like to pick winners. Always cut the dead weight loose in a portfolio, but with the winners, wait for pullbacks to support. Starting to see that happen a little bit. Stocks pulling back to the 10-week moving average. Add a smaller amount so you keep your average cost in check. You don't raise that too substantially. But you buy a stock, it goes up 20% in 1 to 3 weeks' time. I really have to take it on a case-by-case basis. But the number one rule is you want to hold on to it. You want to give it room to work. And so if it comes in 5%, 7%, don't worry about it. Stick with it. It could be a big market winner. And then, in terms of adding to it, sometimes I'll add to it if it comes down to the 10-week moving average. Maybe it shows a series of tight weekly closes for 3-4 weeks, then it breaks out again. That's an opportunity to add, but the rule with that 20% in 1 or 2 weeks' time, hold it for 8 weeks. That's the specific rule that O'Neill teaches.
Sounds great, buddy. All the best to you and your family, man. I'm telling you, we so appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. It makes my day. Thank you.
Okay, buddy. Take care.
All right. Take care. Bye-bye.
Okay.
Hey, it's the calls like that make it worth it, right? All right, appreciate that. Got some calls coming in here. Next, we're going to go to Brandon, Washington State. Talk to Frederick. How you doing today, Frederick?
Hi, Ken. It's actually Renton.
I'm sorry.
Well, your screener couldn't hear me. Okay, so we're talking basis. Let's take a look at some of the resource plays, and then what I just went into this morning was Arch Coal, symbol is ACI. And I've been scouting that dude, probably for the last 2 months. And it looks like it gave me a signal today, so I started a position on it. If you throw a weekly up and then a daily, it was a tough trigger for me because it went up 8% this morning already. So let's take a look at Arch Coal.
Yeah, so taking a look at Arch Coal, it's making a nice move today. Cleared some resistance, right? That $7 level was a little bit of a ceiling for the stock over the past few days. But it's acting well. You got a big push in volume today. It recently climbed back above its 50-day moving average. So I think it looks good. This is what I would call more of a bottoming base. So it's a base that's forming well off a high. So it's not typically the type of of buy that I would make myself for my Ultimate Growth Stocks model portfolio. But looking at its technical picture, it looks like a move over $8 a share in this market environment that seems to be improving. Is a distinct possibility. So you'd be looking for a breakout over 8, and then 200-day moving average right around $10 would be maybe an area you'd look to take some profit.
Yeah, Ken, that's what I was going to say. When you, regardless of whether it's Arch Coal or any of your other plays, do you subscribe to the notion that once you've cleared a major moving average such as 50, you're in a buying mode, and then when you would come up to the 200-day moving average, another area of large support, you'd want to trim some back and watch the behavior, and then you would either add or go from there?
Yeah, exactly. I mean, I'm a big believer in using moving averages. The technical analysis that I use is, I learned it during my years at Investors Business Daily, but, for me, technical analysis is not about, there's a lot of different ways to do technical analysis, Bollinger Bands and stochastics, but for me, support levels, resistance levels, right now the fact that Arch Coal is back above its 50-day moving average and approaching, a recent high of $7.75 thereabouts. The next resistance level, which at one point was support, but the next resistance level is going to be that 200-day moving average at $10 a share. It's probably not going to be a straight move up to that price level, but the way it's acting now, outperformance today, good volume under some accumulation here. I think there's a good chance it could ultimately break out over that 778 level.
Okay. Yeah, I use all of what you mentioned, the stochastics, the Bollinger Bands, the support resistance, and I also subscribe to some business IBD theories as well.
Yeah.
Okay,
yeah.
Just wanted to throw that in there. That's a little something different than what most of your plays are, but it is a technical picture I wanted to just share. So.
Yeah, it's not exactly my cup of tea, but I'm open to patterns that can work, and to me, even though it's not right in my roundhouse, it's showing signs of life here, and is not looking too bad as it tries to come up off a bottom here.
Cool. All right. Thank you. Have a good day. Bye.
All right. Thanks. Appreciate it. All right. Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi. Yourself, sir?
I'm doing well. What's happening? You still there? Okay.
Yep. I was interested in AEO since they announced a special dividend. I believe it was today. So what you think of it?
Yeah, American Eagle Outfitters. So Nick, I don't know if you're familiar with how American Eagle's got a lot of great qualities, fundamentally strong. Good top-line growth in recent quarters. Specialty retail is not an easy industry group to play. Consumers are fickle, but American Eagle's a very strong stock. The issue with it is that it's I would call it extended here. I would say it's a little bit another term for extended is overbought. It's been running higher for a while. Working on almost 7 straight price gains, getting close to $23.50, $24 a share. So the last technical breakout here was over 21. And the rule that I use is that when a stock breaks out over a high, like American Eagle did, you don't want to chase it when it moves more than 5% past that swing point. So American Eagle right now, you're talking a stock that's almost 10% past that swing point. So how would I play it? If I were to buy it, I would wait for it to come back to that $20, $21 level, maybe come back to a support level like the 10-week moving average. You could buy it here. You'd just be buying a little bit of a stock that's extended in price, and sometimes when you do that, you buy a little late. You're sitting on a loss earlier than you want to be.
Yeah, of course you wait a week, you lose the special dividend.
Yeah. Well, the dividend play, a key support level for American Eagle, I'm looking at the weekly chart now, is $21.50. It's at $23.66 right now. It could keep moving higher. I suspect that you're probably going to get a period of market softness coming up where you'll be able to pick American Eagle up at a slightly lower price. It may not come all the way back down to that $21.50 price level, but if you could get it as close to that as possible, I think that's a more palatable entry point than $23.66 where it's trading right now, only because it's run up a lot in a short amount of time.
So basically you're saying disregard the dividend and wait for the stock to trump.
Well, when does the dividend payable? I mean, is it coming out like tomorrow or the next day? Do you have to own it by the end of today to get the dividend, or tomorrow or something?
At the end of next week.
Oh, the end of next week. All right. Well, so that gives you a little time. As long as you know if you got to be a shareholder of record by a certain date, give it a few days. See if you can get it on a pullback here. It's just extended right now. It's a little looks a little toppy to me.
Okay, Ken. I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Okay. Have a good day, sir.
All right, you too. Call again. Thank you. Jeez, boy, these calls coming out of the woodwork today, and I guess that's what makes it good to be in this business, to get calls like that. I do appreciate it very much. And listen, hey, I do have a passion for the market. Hopefully that shows through. And I first got that passion for the market, when I started with IBD back in the mid '90s, and getting to know Bill O'Neill and getting to learn about a kind of a different type of investing. Buying quality, buying stocks with good qualities, not buying low and selling high, but buying high and selling higher. And that's sort of at the crux of how I go about doing things with my Ultimate Growth Stocks model portfolio. I'm not about buying stocks just because they're going through the roof and hitting new highs. I'm buying stocks when they're coming out of consolidation areas, and buying stocks that have good fundamentals. So again, Nick asking about American Eagle Outfitters. It's a good high quality specialty retailer, no doubt about it. It's a well run company. There's a lot to like about it, but I use technical analysis too when telling me when to get into a stock, and the time to get in here was when it broke out over $21 a share. It's at $23.66 right now, so it's probably about 10% past that swing point. A little bit extended. Maybe you get a pullback down to that $21.50 level, and if it finds support there, it's a reasonable entry point. So. All right, enough on American Eagle Outfitters, and Nick was saying they're paying a special dividend coming up as well. So taking a look at some earnings reports today, let's take a look at Pier 1 Imports. Speaking of a retailer that is another retailer that is very well run. Pier 1 Imports today up 13 cents to 19.68. Another company that has been showing excellent relative price strength. You can see the big uptrend that it's been on. Looking like an outside day here, intraday high of 20.26, a low of 19.05. Another stock that looks a little bit extended here, but earnings were up 36% from a year ago to 19 cents a share. Sales up 8% to $367.6 million. It was mostly in line with expectations. Same-store sales up 6.7%. The company gave guidance for fiscal 2013 of $1.10 to $1.16 a share, compared to prior guidance of $1.08 to $1.14. So company raised its own guidance, but analysts are currently at $1.16, so it's kind of lukewarm guidance, if you ask me. But stock's trading not too badly today. All right, let's see what's going on with GWW. This is W.W. Granger, distributor of maintenance, repair, and operating supplies for businesses, industrial customers. Stock, this one just can't get out of its own way. I was really looking at this one for a possible breakout over $210 a share. It really has been a ceiling for the stock, that 210 level, going back to mid-July when it made that big move right here. It is taking so long for this thing to muster a breakout. I'm wondering if it's ever going to happen. So it's actually a reason why I got out of this stock a little while ago. I did own it for Ultimate Growth Stocks. Sometimes you're going to buy a stock and the objective objective is not going to be met. And when that happens, if you realize that that's part of the game and not everything is going to work, cut it loose, move on, and find something else that will work. So Grainger today's monthly sales in August up 10% from a year ago. Not good enough for the market. Stocks down $1.11 to 205.67. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m., and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
decent day of accumulation for the major averages today. Right now, volume on the NASDAQ is tracking about 10% higher than what we saw Wednesday. Nice volume push on the New York Stock Exchange, a little bit heavier than on the NASDAQ. NYSE volume tracking about 22% higher than what we saw yesterday. So looks like we'll get higher volume gains for the major averages, and with about 5 minutes left to go in Thursday's session, we have S&P 500 outperforming, up 1.6%, 23.5 points to 1460. The Dow is next, up 204 points, 13,537, and the NASDAQ doing well, up 43 points, 1.4% to 3157. QE3 from the Fed was music to the market's ears, and again, I don't know how else to say it. The market trend is upward until proven otherwise. So I've been saying in recent weeks that, without any meaningful sell signals to work with, it just didn't make sense to, move to the sidelines and start raising cash. So I'm just kind of holding on to what I have that is working here. And again, detecting sell signals is something that you always want to do during a market uptrend, but the bottom line, when you look at a weekly chart for the NASDAQ, and let's do that right now in Tiger TV, NASDAQ Composite, you've got an index that is breaking out to new highs here. Mentioned that the 10-week moving average might seem like a long ways down there at 3,028. Still it wouldn't be that much of a pullback, but even if the NASDAQ from its current price level of 31.53 thereabouts, if it were to come all the way down to its 10-week moving average at 30.28, it might be a little painful. You see some gains, gains in the portfolio get smaller, but that's 30.28 levels is an area where I would expect it would find support if it were to come down there. And the same thing for the S&P 500 as well. Let's take a look at a weekly chart for the S&P 500. We start to see some higher volume declines in the indices. We hear that September is a bad month for stocks. We're hearing about earnings deceleration, S&P 500 corporate earnings, looking a little bit suspect, but we really have to just watch price and volume trends in the major averages, and until the market starts doing something wrong, there's no reason to get too bearish here. So 10-week moving average for the S&P 500 happens to coincide right around with that 1400 psychological level. S&P 500 right now at 1458. So it's going to have to fall 58 points thereabouts to get down to 1400. The 10-week moving average for the S&P is at 1403, so would be a pretty modest pullback to get down there. And if it happens, I would suspect that we'd probably see buyers come in and offer support. Again, bonds continue to be under pressure. Here's a look at the TLT, the iShares Barclays 20-plus year Treasury bond fund. It is down 47 ticks today to 121.54, sitting very close to its 200-day moving average. We talked about the U.S. dollar index broke below its 200-day moving average, long-term support level earlier this week. The TLT is still holding above that line, but I'm not sure. I'm not sure how long it's going to be able to hold there. So the 200-day moving average for the TLT is at 119.90. It currently is at 121.54. A lot of stocks I wanted to talk about today. I'm not going to have much time, but we'll get into that tomorrow. Good follow through in NetSuite today. Good follow through in Panera as well. So we'll wrap up the week next week with another edition of Breakout Investing from 3 to 4 Eastern. Coming up next, as always, the Tom O'Brien Show from 4 to 6. I'll see you back here tomorrow, 3 o'clock, for another edition of Breakout Investing. Thanks very much.